Welcome to today's market report. European stock markets traded sharply lower on Friday, with investors cutting positions given the uncertainty surrounding the populist trading movement. DAX in Germany traded 1% lower, CAC 40 fell 1.1%, FTSE 100 dropped 0.9%. Global stocks are set for their worst weekly slide in about 3 months, partly on the turmoil caused by small traders organizing over online forums such as Reddit to force hedge funds to reserve short positions on a series of stocks. This has resulted in these funds dumping other equity holdings in order to raise liquidity. Popular online broker Robinhood, along with other brokerages, limited the trading ability of these retail traders for a time Thursday, but it stated that some restrictions will be lifted on Friday, raising fears that the volatility will resume. This added to concerns about the slow rollout of vaccines in continental Europe, a region hard hit by the COVID-19 virus, which has culminated in a spat between the European Union and drug makers over the distribution of listed supplies. There was some good news on the subject after biotech firm Novavax said late Thursday that its coronavirus vaccine was more than 89% effective in protecting against the virus in its phase 3 clinical trial conducted in the UK. In corporate news, Ericsson stock rose 7.8% after the Swedish telecom company Ericsson reported strong fourth quarter core earnings on the back of healthy sales of 5G equipment. Daimler stock rose 1.6% after the German car maker beat 2020 profit expectations on the back of a strong fourth quarter and provided optimistic guidance for the next year. On the downside, fourth quarter results showing a marked deterioration in loan quality pushed BBVA stock down 2.5% and led to losses across the rest of Eurozone banks. The stock 600 banks index fell 1.6%. Commerzbank stock dropped 1.1% after the troubled German bank announced a plan to cut a further 10,000 jobs and close hundreds of branches. French GDP shrank much less than expected at the end of last year, falling 1.3% in the final 3 months of 2020, compared with a forecast for a contraction of 4%. However, German and Spanish GDP both beat expectations, while German unemployment fell surprisingly sharply in January. Oil prices largely stabilized on Friday as traders balanced concerns over weakening demand due to COVID-related travel restrictions against upcoming supply cuts from Saudi Arabia and falls in U.S. crude inventories, which fell last week by the most since July, to their lowest level since March. U.S. crude futures traded flat at $52.34 per barrel. Brent rose 0.4% to $55.31 per barrel. Gold futures rose 0.3% to $7,846.60 per ounce. On the FX front, GBP/USD meets fresh supply as US dollar recovers further ground towards the 136.50 level. The sell-off in the major gathers pace in the European session as the equities shed nearly 1% due to the concerns over the speculative trading seen on Wall Street stocks over the past few days. Also, the risk sentiment remains sore amid the COVID vaccine roll between the UK and the EU. The production delays in the vaccine have triggered a dispute between the UK, EU and drug maker over sufficient supply of the jabs in the old continent. Markets now look forward to the US core PCE price index and the revised UOM consumer sentiment data for fresh trading incentives. Meanwhile, COVID and vaccine updates will also grab attention amid month-end flows and the sentiment on Wall Street. The 4-hour chart shows the bulls have faced rejection in the 137.50 neighborhood multiple times since 21st of Jan. That, alongside lower highs on the 4-hour chart, relative strength index indicates scope for a pullback. The immediate support is seen at 137, which, if breached, would open the door to 136. According to Commerzbank, a euro-dollar held steady yesterday but remains on the defensive. It was recently eroded the 55-day moving average, and attention has dropped to 120.14, the September high, and the 120.03 2020-21 uptrend, which we suspect will hold. The euro-dollar pair showed a little reaction to the encouraging German growth numbers as the sentiment remains tepid amid the recent Wall Street frenzy. The major was last seen trading at 121.70, modestly flat on the day. The dollar index was up 0.3% at 90.69, adding to Wednesday's 0.6% gain. Dollar yen was at 104.50. This is today's market news. Thanks for listening. We'll see you next time.